Hello everybody. Yes, I made $1,200 today on a single trade from ES, specifically $1,235.20. I went long on ES, so I'm going to break down my trade and let's jump right into it. So a lot of you guys, when you're in an uptrend in the 4-hourly, downtrend in the hourly, don't take shorts necessarily. Obviously you can, but if you're in an uptrend in the 4-hourly, you don't really want to take shorts on the hourly because higher time frame holds higher power. So I kept that in mind because although we broke structure and we were in a downtrend on the hourly, I was like, in the 4-hourly we're still up, and in the daily we're still up. So I was thinking bullish. Now we go into market open, and what do? I mark out high time frame liquidity. This is all I really trade with. I basically trade with high time frame liquidity, break of structure, inverse fair value gap / fair value gap entry on the 1 minute from the high time frame. So I marked out London session low, which at the time was somewhere down there. London session high. I marked out Asian session lows, which I thought were going to get swept actually, but they didn't. And then these 4-hourly lows right there. And then on the higher time frame, you had these highs. So what do we do when market opens? And I did the same thing for ES and NQ, by the way. So what do I do when market opens? Let's go down to the lower time frame. Market opens and we are pretty static. So I just got back from school. It's about like 9 something a.m. when I took this trade, and I was just waiting for either this higher time frame liquidity to get swept or this low from Asia to get swept. And then I was waiting for a reversal, so to go back to the upside. So my hope was actually that we were going to come all the way down here to these 4-hourly lows, and then we were going to sweep up and create a new high on the day, which we did, but we didn't sweep that low of lows. But it's okay. It doesn't have to go exactly to plan in order for you to take a very good trade. That was just my daily bias. Obviously, when you are a good trader, you're able to adapt your daily bias to the market in order to win the trade. So market opened, and this is on the 5-minute, so we were very choppy. I don't want to take a trade. I'm waiting, I'm sitting, and I literally waited for about 2 hours, right? Because this is 11:05. So my trade was this. I took a trade right there, and I took it all the way up to these high time frame liquidity. So this was my trade. It was a risk reward of 1 to 2.92, or 1 to 3 about. Now, when we are in this position, market opens, and I had my liquidity marked out. So before we hit any of that liquidity, I'm not really going to trade. Now, I'm waiting for us to hit that liquidity. It doesn't. So why did it start to sweep here? With my plan, I wait for a sweep of liquidity and then a break of structure. And break of structure happened here, but it didn't sweep liquidity. So the reason was, let me take these sessions away from you. The reason is because we had this hourly fair value gap here that ES and NQ both wanted to go into and then completely reverse. Now at the same time of this, 11 o'clock to 12, so from 10 a.m. to 11:56, President Trump was, the news about him speaking about the US and the UK tariffs or whatever was out. It was right here, okay? So it was from 10 a.m. to like 11:56, and that is what completely changed the market. So, but at the same time, we were also in an uptrend. What did he say exactly? He said that he thinks the market's going to rally and that everybody should be buying. And that's what everybody did. At the same time, you can see down here, the same thing happened with Bitcoin. Bitcoin's over 100 grand. Super high right now. Making money on that too. So, yes, we came down here. So if we look at the trend on the hourly of this, we are making a high, low, lower low, higher high. When we make this low, we respect this bullish fair value gap. We respect the fair value gap, we come back up. We come back up and we don't sweep this liquidity yet, okay? We then retrace down here, we inverse this, delete that, we inverse this fair value gap right here, and we break structure right there. So we are in a downtrend officially after that happened, but we have this lower fair value gap down here that's kind of hiding from everywhere that hasn't been tapped into. Now, I was kind of thinking we'd go all the way down here and we'd sweep this lower liquidity, but all it took for us to get a sweep was kind of just this fair value gap. So this is the fair value gap. We go into the fair value gap. Once that happens, I scale down to the lower time frames and I look for break of structure or double confluence to make me want to retrace back up into this higher time frame liquidity, because again, on the daily we were in an uptrend, the economy was doing well. So I was always looking for those highs to get hit. I just wanted the lows to get hit first so that the highs could get hit. So we come down into the hourly fair value gap. This is on the 5 minute, but you can see it anyway. We have this, we trickle down, we're making lower highs, lower lows, lower highs, lower lows, until we get into the fair value gap, and then we can zoom in here. We have a fair value gap here. Remember, size does not matter. And this gets disrespected. So we have an inverse fair value gap here. Is that enough for me to take the trade? Am I going to risk all that money right there just because we inverse that fair value gap? No. I need this double confluence. I need two at least after the sweep of liquidity to really have trust in this trade. So we sweep that fair value gap. Now, I'm waiting for a break of structure and we get it right there. When we break structure on the 5 minute, sorry, if I go down to the 1 minute, right, if I go down to the 1 minute and we come into this fair value gap, right here, right, come into this fair value gap, am I looking to take a trade directly because of one break of structure? I took my trade way up there, way on this line, but we get a break of structure on the 1 minute on this fair value gap. Do I take the trade there? No. Why? If I took the trade on this break of structure, go to the 5 minute, where's the... If I took a trade on that 1 minute fair value gap, yes, it would have hit. However, it could have easily gone back down because we need to wait for remember, higher time frames hold higher power. We're waiting for that break of structure on the 5 minute because I did not trust only because we inversed a fair value gap on the 1 minute. I needed to break that fair value gap on the 5 minute, okay? So we break structure on the 5 minute, boom, I go in. Where am I gonna put my take profit and stop loss? My stop loss was underneath this fair value gap because right here is a bullish fair value gap. If price wanted to go up here and drop down in this fair value gap and then go, I was okay with that. So I put it just below that fair value gap. Where did I put my take profit? Now I was going to place my take profit here. I was thinking about doing partial take profit here and there. I didn't end up doing it in the end. That is a lesson learned for me. I'm a trader just like you who's trying to learn these things just as much as you are. So we take profit here because that's higher time frame liquidity. As you can see, that is there. And that was a 155 pip long take profit. So why we wouldn't have placed it anywhere below, because if you look on the hourly, which is where I like to base my take profit off because that's where higher time frame liquidity is at, that's typically where I place my take profits. There was nothing here, no liquidity that could have been taken. Obviously, in the 5 minute, yes, we had this high, which you can do that if you are that type of trader. I'm just not going to put my take profit there. And then obviously, this high up here, I didn't think was gonna hit it as confident as I thought that was gonna hit this. That's why I didn't place my take profit there. But, you know, I probably should have seen that coming because the news from Trump was very, very impactful. And then after that, after we swept that daily liquidity, right there. Oh, sorry, right there. I wasn't looking to go higher because think about it. We started the day there, and we're coming all the way up there, all the way up there. Yes, we're gonna probably end up going here throughout this next week. However, today, it was not gonna happen for me. I did not think that would happen, and that's kind of what happened. We just started consolidating, and then now we are retracing back into this hourly fair value gap there, which we just disrespected actually. So that'll be interesting to see what happens next. But yeah, hope you guys enjoyed, gained knowledge from this. And if you're a day trader like me, I'm 18 years old, just don't stop. If you lose money, why did you lose it? Every trade is a lesson. Every win is a lesson, and every loss is a lesson. That's why I love trading. You're not profitable because it's your fault. It's not the market's fault. It's not your mentor's fault. It is your fault. You are unprofitable. And just some advice, backtest and really journal your trades, because it helps you be conscious of the stuff you're taking and the mistakes you're making. Don't just take a trade because you want that quick dopamine hit. All right, I'll catch you in the next one. Peace.